The long-awaited jobs data released last Thursday was always going to struggle to beat expectations, given how strong the last three figures in the series have been. And in the end, we saw a fall of 8,000 jobs, including a fall of 41,000 full-time jobs, but a rise of 33,000 part-time across Australia. Overall, the unemployment rate rose to 6%, with businesses reporting a greater degree of spare capacity. And we saw New South Wales still leading the states at 5.2%. So not enough to change our Reserve Bank's outlook for interest rates, but a watching brief in case the jobs market loses momentum as global markets unravel. The latest RBA statement on monetary policy was typically balanced but positive in its assessment, with the household sector having softened a little coming into 2016, but the business sector looking steady, with reasonable growth in business credit. Business investment fell by 5% in the September quarter, with an expected fall in mining investment, but non-mining figures were more positive, and we still expect growth in the services sector ahead, as well as construction and agriculture. Similarly, confidence surveys and business conditions are at elevated levels, not surprisingly in the services sector, but more recently in goods-related segments, benefiting from the low Aussie dollar, low oil and petrol prices, and not just low interest rates, but the outlook for rates to stay low for longer. And the farm sector, which has been challenged by falling commodity prices and El Nino weather patterns, is looking forward to the possibility of a La Nina event, now favoured by many analysts, and growing demand for soft commodities and rising livestock prices. So, while stock markets have a long way to go to recover recent losses, it's pleasing to see recent resilience in Australian consumer and business confidence, and reasonable economic data in what still promises to be a challenging year, subject to frequent bouts of uncertainty and regular shocks from overseas. And finally, the Aussie dollar is holding firm, trading above 71 US cents. But the key will be its capacity to devalue if offshore demand falls and if bulk commodity prices continue to fall. Until next week, that's the market update from Bendigo Bank.